Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you another time as we check out what's going on in markets and try and make sense of it. More importantly, the disclaimer before we get started says that the content of tonight's presentation is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Other than that, it's important to remember that trading is risky. Markets go up, they go down, they might not go the way you wish, and you could lose money. It's always important to remember that it's you and not me who's responsible for everything you do. The agenda for today is to answer your questions about those markets. We're going to do a technical analysis, read on any of your requests. It could be stocks, it could be commodities, it could be indices, it could be crypto, or anything about trading. So the methodology, the money management, or the mindset, I'll give you my best view on it. I'm going to head over to the AMI Broker screen where we're going to kick off with our portfolio management. So this really sets the scene for us and probably also highlights the difference between what's on screen and what's happening on the good old Aussie market. Not this. This is good. This is great. This is fantastic. It just keeps keeping on at the old Nasdaq. So if you were looking at this, you would be fully invested, all your capital in the market. When you come to Australia, it gets a little bit trickier because this is definitely not a full risk position technical picture. It's very sideways. We have equilibrium. So, you'd have half of your capital invested. At the most, you'd have 2/3, but you certainly would have a substantial amount in cash. And there's an old saying that in choppy markets, trend traders get chopped up. And that's really our only defense is to move to cash. Having said that, I'm seeing a solid group of very solid uptrends and equally a very solid group of downtrends as well. I'm not sure if you catch my chart scans list. I expect most of you probably do, but I hope this is going to work because I didn't test it beforehand. It does good, but if you head over here to market index, and if you go to insights and opinion, and there they are, ChartWatch scans, and if you click on technical analysis, you'll get them all. And basically, when you're in here, it's not hard to copy and paste that table literally as I'm doing it now. Try not to get stuff on the side. I've just gone too far to the right, but you can see you can do it there with the shift click, and then copy and paste that into ChatGPT and say, hey ChatGPT, format this for TradingView. Probably would work, but I know you know what you need in a TradingView watch list. If I remember, I'll put it in the email. I keep trying to remember to do that. But what that'll do is allow you to go through your trading list, watch list like this, and then just tab through and you'll get to see all of those wonderful uptrends that I am seeing in the market. And then of course I do provide you with a watch list. You can create a separate one for that. But in addition to those, you don't have to be all positioned to the long side. I think there are some tremendous, wait for it, downtrends as well. I think there's some really good charts in here. And look, to go short these, you would typically need the help of a CFD account or an options account. If you wanted to do it that way as well. CFD is probably my preferred way of doing it. So there's the public service announcement, bringing it back obviously to what we're talking about, which is portfolio management. Hopefully that does help you understand some of your options there, because there are, whilst it looks a bit sideways, there are still opportunities in the market, but you want to have a bit of a balance. I think that's the message. If we just go back here, your full risk position. But some of you are just trading US stocks as well. I know that. So it's also relevant to discuss that separately. Very quickly now around the grounds, we're just looking for red flags here, and we're probably very close to finding one there in the Russell. Wouldn't want to see it get beneath this trough low. That low there is 1993. A close below 1993 is disturbing. A close beneath, say, that one there, which is 1968. Is very disturbing because it's beneath the long-term uptrend, and we haven't had a close beneath the long-term uptrend really since November last year. Okay, so just to put that into perspective, I'm going to skip the S&P 500 because I don't think there's a lot of relevance because it looks just like the Nasdaq, right? It's the same stocks that are powering that one. Midcap might be interesting, something a little bit different. Not the same stocks here. We're not those big Microsofts and Googles and Amazons and Apples and Teslas We're very different, and that looks a little bit more like the Russell, a little bit more like the broader market. So broader corporate America, not as good. Heading over to Europe, we've got some problems here in France. I think you've been listening to the news, so you know what they are. Some of that spilling over into some of the other European bourses, but largely I think okay, fine there on the DAX, the Euro Stoxx 50, the FTSE 100 is fine despite some of their own election issues, and nothing much happening in Spain. Heading over to Asia again. The reason why I'm whizzing through is just looking for red flags. That's a red flag in Asia that's not right, in Hong Kong / China. I put out in my evening wrap some technical analysis on this one tonight. I think we've got some big problems here, and it could well spill back into our local resources sector. Some of you would know that because you've got some investments there. Nifty 50 going fine, and seeing that surprises me because the ETF that often comes up in Australia isn't doing that well. It does show, I guess, some of the pitfalls of ETF investing, and that Nikkei looks very good. So, certainly there are haves and have-nots. We are just not a have and a not a have-not. We're stuck in the middle. Maybe just very quickly through the sectors, their discretionary is a little bit like the index, stuck in the middle. Energy, interestingly, hitting that long-term downtrend ribbon and bouncing straight off it. A pure coincidence. Don't go think, oh, that ribbon's done its job again. It's just pure coincidence. The financials still look good. Gold is it's neither here nor there, but it is bouncing a little bit there off its long-term uptrend ribbon. Healthcare still looks fine. Technology is fine. That's the second technology index. Materials, definitely some issues there, and no surprise that materials and resources here look a lot like the China index, doesn't it? Property flat, but deceptively flat there because of really all but Goodman Group in downtrends. Staples actually looks half decent. We might get a chance, if you remind me, to look at the Woolies chart. We have looked at that one previously as an aggressive setup, and now it's looking more like a turnaround play. Telecommunications, not great. Utilities still okay, but just... And we're at the end of the list there. I mentioned the Aussie dollar last week, only because it's here and it's easy to get to. I talked about the potential of that going up. Look, hey, maybe you did trade it on your CFD account. That'd be wonderful because you might be making a little bit of money. But it was more just the understanding of why FX moves. And certainly this, you can Google why does FX move on the internet, and you're going to get 1,000 courses. They'll charge you $10,000 to teach you how to trade FX. Of course, none of them are worth the pixels on the computer screens that they appear on. But really all you need to understand, of course, is the differential in the interest rates, and in our tour around the grounds, the Aussie rates, they look like they're coming off a little bit. They have ever so slightly, but they have not come off as much as, for example, the US 10s there, and because we're getting a relatively higher rate in Australia than the US. In fact, the Aussie 10s have overtaken the US 10s, interestingly, for 4.36% in Australia versus 4.3% in the US. We're getting a higher Australian dollar. And I think we've covered the important ones there. Importantly, those US yields are coming down because we are firming now for an imminent Federal Reserve rate cut. And we, if you believe the rhetoric, are firming for an imminent, as in August, rate hike in Australia. I think both of them might take a little bit longer than the market's expecting. How about that? Just wanted to show you some of those Chinese property indices that I don't have in Amy Broker there. This is the one I put up in tonight's chart. That looks horrific. I mean, please, somebody putting the messages, a chart that looks worse than that. I think you'll struggle to find one. And we shouldn't joke about it. There's nothing funny about this. This is bloody well tragic here because it's not going to be good for us somehow. I can see somehow it's going to come back and bite us on the you-know-what. And then we'll just have a quick look at the US banking indices. Nothing at all wrong with that one in terms of red flags, and that one's fine also. Let's quickly just go and have a look at the commodities because I know some of you like to trade them directly via those CFD accounts, or some of you like to trade them via stocks. Silver took a turn up. That was a little bit surprising for me. I thought that this pattern was going to give us at least a prolonged period of sideways motion. I didn't pick that would fire up like it did, and it has, and that's a really good move actually. So I think swinging back to the long side there, adding some risk to those positions. Gold, I'm a little bit more neutral for obvious reasons. I think the chart there isn't as emphatic in terms of the demand side showing, but looking firm. I think that's more encouraging. I don't mind this actually. I think copper's put in a decent bounce as well. But what will be important now is the dink, the all-important dink. How deep is the dink? A shallow dink, and we're going to keep going up. And you all know what I mean when I say the dink, because the path line. That's what I'm looking for. I can't remember who showed me how to do that last week. Might have been Sudesh, maybe. But there we go. I thought there'd be an arrow at the end of it. Doesn't matter, but that's the dink. So the more shallow the dink, the more demand there is in the system, the less supply there is in the system, and the more likely we are to keep going up. And on any of those ones that are looking prospective, a little bit of a pullback is always healthy. It's always healthy to test the demand side and see how strong they are. Unfortunately, I don't think the demand side here is very strong. I hope I'm wrong, and I hope this does pick up and push back above 114.30. And that's the key level now. It's also coinciding, or maybe not a coincidence, with that long-term downtrend ribbon that seems to be doing its work. They're all too well, and we're back below the short-term downtrend ribbon. So it looks like that long-term downtrend is very much intact after what was a promising rally. So that's a little bit disturbing. Heading over to uranium, not a great deal going on here. I'll just switch that to the line chart, but it is still as precariously placed as it was last time we saw it. We certainly don't want to see it close beneath, say, 83. I think that would be the death knell, dare I say, for uranium. We're already seeing Aussie uranium stocks coming off, so I don't think any of you would have any long positions there. Isn't that interesting? I know you don't, because I know you've been taking all those minus 1/3, and you'd be definitely zero risk positions by now. And I would put to you that you're the only group of Australian investors. As a group, there might be, I don't know, there's about 200 people registered, and there's about 150 people that watch the videos, I can tell you. You'd be the only 150 Australian investors who are not long any uranium stocks. How about that? I'm sure that's you. Looking at crude oil, let's look at the candles there, and it looks okay. A bit of a problem here at what is a bit of an area of supply. I need to fix up. There's been a contract roll, so you can see all my levels are wrong. I did update them today on Brent. Those are right, because I want to put this in my evening update tomorrow night. So stay tuned for that if you're interested in the analysis of the crude market. But we have a bit of a problem here at sort of 87.45 into 88.53. The candles are manifesting some excess supply up there. But I think it's still strong enough here. I think as long as the price stays above that short-term uptrend ribbon, we're okay here. But that is a little bit disturbing, that last little pullback there. Nothing happening. I won't go to the line charts. I'm telling you, there's nothing happening in thermal coal and really coking coal, met coal. And there was some news on this one, obviously, with there's a fire caused some serious production issues at one of the Anglo-American mines in Queensland. That caused that initial pop from 235 up to there it is again, dark pink ribbon, the long-term downtrend ribbon doing its job again. We have seen a bit of a pullback from there. So largely sideways. I did have somebody refer to me on Twitter as, the ribbon guy. The ribbon guy's back. And that's okay. That's okay too. There's the Twitter. I didn't mean to click on that. Popped into my head, and my mouse was working too quickly there, because I meant to go back to here and start to do your offline requests. So that's our whip around the grounds. Obviously get your requests coming through online. I can see them now. Make sure that there aren't any technical issues addressed in there. I don't think so. And Carl, heads up, Carl will do his lolly if you don't include an exchange code with your ticker, says Roscoe. I will do my lolly, yes, so make sure you put your exchange code in there, because I don't know them all. Let's go to Adrian's offline request, and one I'm sure is going to be very popular this evening, which is Zip Co. The last time I don't think we have looked at this one for a little while. I'm guessing somewhere around here-ish. But certainly we have had some history where we were calling, exits back here minus 1/3, maybe minus another third there, and all out somewhere around here is my guess. It didn't have to do a whole lot with it until here. I don't know, I pointed to that arrow. That's probably the first one where we're starting to see some demand come back in, and then I know why I pointed to that arrow, because that's the one you really, I think, want to buy. And I think that's close enough to the major point of supply, and that's a big flourish there, a bit of extra volume as well. Great upside volatility. I think that's probably where you can do your first ad. But if you didn't, I think that's definitely the second ad, and that's the third ad. So you could probably go plus 1/3, plus 1/3, plus 1/3. Maybe not that one, because I would have liked a higher close, but I can see exactly why. Like, this is no mystery here, why we saw that upper shadow, because it's being impacted by this. Certainly here, I'm happy with that, even though it's actually down on the day. People will go, oh, that's down on the day, but no, it's still a bullish candle. There's still that lower shadow telling us that there's demand lurking in the system. That's a dink. That's an intraday dink in itself, and that's really important, because you will see these intraday dink. Come up with a new technical term in today's candle. Look, it could have closed higher, but it's fine. And the only criticism I have, and it's a small one, is we're sort of encroaching a little bit on $2. Having said that, it's not our first rodeo at $2. It might feel like it, because you think, oh yeah, look, it feels like Zip hasn't been there ever, but no, it has. I mean, Zip was a $14 53 stock. I know nobody's still got it from then, of course. But yeah, look, I don't think it's our first rodeo at $2. I think we're okay. So no complaints. The question here is, I have some already. I'm planning to add some more after this current move. Adrian, I think you should have added more already, but maybe you did. But I'm going to go plus 1/3. Could the candle have been a little bit better? Of course, it could have been a little bit better. Could have closed on the high. But look, I'm still okay with it. I'm going to go FRP and plus 1/3. Based upon that last candle. So that is, if you don't have it, is there anything I'm trying to think if there's something I needed to add on? I don't think there is. I think, Zip's pretty straightforward. And there might have been somebody else that asked about it as well. Maybe that's what is in the back of my mind. And I'll let that percolate there in the back of my mind in the interest of continuing with Peter, who has SXE. And fun enough, looks quite similar, doesn't it, to Zip? It looks very good. No complaints. We are seeing a little bit of supply coming in, but it is a little bit of supply within the context of this entire move. We can become a little bit transfixed here, can't we, on some of these black candles, and we might find ourselves jumping at shadows and getting out of really good trends when we don't need to. And I can't see anything there that is so sinister that would push me out of a trade. You can see how I operate the last time that we did some analysis on here. We like to draw these arrows beneath points of demand, and that is the key point of demand there. So let me go copy paste. That was a time there we looked at it, FRP, and we're going to go point of demand this time. How do we know it's a point of demand? Well, if we zoom in a little bit and we put in our peaks and troughs. There's a little trough there, and there's another one in here, and here, and here, and they're sort of converging a little bit, aren't they? And then we're coming up here, and we don't know where that one's going to end. I might just draw also a few more. There was a question here from James Deneau, from Jesse. When considering trend lines using the higher highs and higher lows method, do you just consider the one candle, or do you keep moving forward until you find a candle that has higher highs and higher lows? Then Jesse apologised for maybe not, if I didn't understand the question. Now, Jesse, I don't understand the question, but what I can say, if somebody understands it, please feel free to butt in and let me know. What I can say is that as soon as you see a candle that has a higher high and a higher low, so both of those two things in place, so for example, going from this candle to this candle, higher highs and higher lows, that is the definition of a short-term uptrend, and we start drawing the line. Okay, obviously there's another one, higher high and higher low. Here we don't click on this candle's peak yet to draw the peak, because we don't have a lower high and a lower low. We need both conditions to be in place. So in this candle, this one here, that actually has the blue line on it coincidentally, that's when we click on that line, and then on this candle here, we're back to higher highs and higher lows, and that allows me to click on that line. So we don't actually know until at least one day after the fact, and that's the lag that I guess is required here. One day after the fact to draw that peak or trough. Maybe that's helping. Maybe that's helping answer your question. And this day, it doesn't matter. We've got higher highs, probably equal lows, but it doesn't matter because we're still heading up. And then on this day here, lower highs, lower lows, that allows me to draw that peak there. I'm going to leave it there. Hopefully Jesse will see this in the recording and he'll ask a follow-up question, and maybe we'll tackle it next week. But just illustrating how we draw those peaks and troughs, and that we do have, at each trough we've got a point of demand, each peak we've got a point of supply, and that is the key point of demand for me. You might say, well, Carl, why aren't these important? Well, I think this point of demand here dominates these two. I think these are subordinate. Is that a good word to use? Perhaps it is. We're going to call that a POS, much like that's the most important POS compared to, say, that one or that one. So we know that if we close above this, for example, then good things can happen. And if we close beneath this, then not necessarily bad things, but we certainly would want to manage our risk with a -1.3 on a close below. So close, and I do the little less than sign, and then we would minus a third. Until then, this one was for Peter. I don't think there's much left to do apart from hold, because we haven't got a reason to sell it. So we're going to FRP, but also don't think there's a reason to buy it just on this last candle here. I think this one was pretty good, but we didn't see it follow through here. So next white candle, that's the other thing we often write in these sessions. So we go next white candle, high close, next white candle, high close, plus 1/3 for me, because everything else is in place. Our short-term uptrend is perfect. Our long-term uptrend is perfect. Outside of a little consolidation here, we were showing high peaks and high troughs, so that's good. The candles, I'm going to say, are predominantly white just because we have actually seen some equilibrium, and that equilibrium between your white and black candles in itself is causing a little bit of sideways movement, isn't it? Starting to slow this trend down. If I zoom out, that'll make a little bit more sense that it is starting to slow down a little bit, but not a deal breaker for me. So everything else is intact, which means next white candle, high close, plus 1/3. Going to Peter's next one, which is ARX, completely different setups. I'm really glad that we're actually going here next, because we get to see the difference between the two. That last one was what we call the continuation setup. So let me just quickly go back to that one, which is SXE, and I just want to label it, just so we know that that is the continuation setup. And there are only 3, so I don't have to do a lot of labelling. And then we're going to go to ARX. And this one, which we haven't done for a very long time, probably since I started doing these webinars again for you back in November, December, I can't recall, in between the Think Markets there, because it didn't need it, didn't require it. It hadn't done the dink in and above the long-term downtrend ribbon. It tried to do it here, but it failed miserably. I mean, was that a dink? I mean, on this day, on this candle here, it was looking like a dink. Okay, I think we all agree that that candle in and of itself isn't enough to go long. We would like some more confirmation, especially given 1, 2, 3, 4, 5 black candles, and then down we come. Interestingly, we had a little bit of a go of it here, but what we probably didn't see here that we are seeing now is the short-term trend ribbon really doing a great job. You see this? See the difference? Before I would have said, look, it's not ready yet, needs more work, needs a bit more cooking, and yet this time I think it's been cooked enough and it's starting to rise. There's an analogy for you. But the other thing we also have, I think we've got a nice base pattern through here. We have seen some volume come into it as well. I think that's important. It's kind of coming in on this dip as well. And this is a dink beneath or in, you could say, the long-term uptrend ribbon. And that's enough in that the short-term trend ribbon is offering dynamic demand. We want to see some nice white candles, and we did see that. I reckon I put it in, and don't quote me here, I think I put it in here. I think for me that was the first candle with this downward move, that support coming in where it could have been a plus 1/3 scenario as a turnaround play. Okay, so turn around setup. Today's candle is fine, actually. I don't know if I'd add a third tomorrow on the basis of today's candle. It's not far away. In fact, if it closed on its high, I would have said yes. It's very, very close, because I think what we're seeing here is the final dink. It's probably the really important dink that we want, is this sort of move here. So it's very close, and I think therefore I would reiterate the other one, which is a completely different setup, but we're getting to the same conclusion, aren't we? Where we're going really next white candle with a high close, next white candle, high close, that would be plus 1/3 for me. It's not aggressive setup. It's a turnaround setup, so it gets the full 1/3. We might find an aggressive setup tonight where we'll find we're doing, say, a sixth. It's only getting half the usual risk that we would apply in our first step. Then we shouldn't. Well, I think then, it is a then. I mean, the setups is the first place we go, and then we start to look at reward to risk. I think this is all pretty fluid down here, isn't it? There's no clear points of supply that sort of stand out there as one we might get stuck on, where the market got stuck, because that's really what we're looking for. And again, if you want a black box system, you're probably in the wrong place. I call this, it's not a black box system, it's called a common sense system. So common sense suggests that if the market got really, really stuck and really caught up on a level in the past, there's a possibility it could get caught up on that level in the future. If the market didn't really care about a level in the past, why the hell would it care about it in the future? So this is all this is very fluid. It's very dynamic on the way down, which means we can be quite dynamic through that area on the way up. Hopefully, one point does stand out for you as being more important to the market. And if it's important to the market, it's therefore important to us than the others. And I reckon that actually doesn't count because we've got equal lows. So we can just draw straight through that one, Jesse, and go to here and here. But what we should be able to see is that we've got high highs, high lows, lower highs, lower lows, high highs, high lows. So short-term uptrend, short-term downtrend, downtrend, short-term uptrend. And all of these together make what we call medium-term uptrend, and then we got the medium-term, I won't draw them all in, but we've got the medium-term downtrend on the other side, which makes this a major point of supply. It's more important than any of these little normal points of supply, the fluid ones. So let's quickly just draw in our pink zone here, because that's what we like to do. And again, it's not a black box system, it's a common sense system. How wide do you draw it? I know there's some conjecture over that, but hopefully you're getting the hang of it. And the best way to get the hang of it is to do it and then see what happens. And you'll find that you'll become more comfortable where you draw. You draw them in a certain way and you go, actually, you know what? I'm getting them right now. The market's tending to do stuff in those areas, and it is a little bit of experience is required. And the good news here is that I think that's so far away that if we were to get in on this next white candle with its high close, we don't have any issues at all with reward to risk. So what we've done here is we've gone through the trade setup, and then we've gone to the next step, which is the trade craft. Now, the final step, which we can't really do in this format, is to compare and contrast those finalised setups that we've gone through, all the steps, and then we compare and say, well, these are the ones I'm actually going to trade. And that is a little bit of gut feel as well. It's and I do say try and get a mix of them. So right now we've got a really good candidate in SXE, and because it's a continuation setup, we've got a really good candidate in this one because it's a turnaround setup. I wonder what we're going to get next from Peter, which is AGN. I was hoping it might have been an aggressive setup, but it's not. It's another continuation setup. It's pretty clear here that everything is going hunky-dory for this one. I'm just going to go over to the store number 2 watch list, because you'll see at the top of that watch list, and these are the setups for tomorrow. So in my daily scans list, I showed you that at the start of tonight's presentation. You're going to get the ones for tomorrow, and Peter has correctly selected my first one off the list. So very simple here, Peter. I just go FRP plus 1/3. Very happy with that one. Oh, I just noticed. Did you notice? And this is just a function of what I do in these scans, which is scan, go down the list, short list really quickly, get it all done, ready for tomorrow. And I don't do the tradecraft part of it, okay? It would just take too long. And I'll leave that to you. That's your job. I can't do it all for you. But did you notice where we are here in relation to quite a big round number, okay? And I say, look, within 5% of that round number, you want to start thinking about lightening the load of up to about 1/3, okay? And I can extend this. I can extend this left. So let's do it. Extend this left. Because the reason why I want to do that is sort of see. Okay, there you go. Now, don't plan these in advance. I can't know what you're going to give me. Okay, they're just this. You type them in and then I answer them. But look, it's pure coincidence. We have had some history at $1, haven't we? Look at that one right there on the knocker, just about 102. And that was the all-time high for this one in that run. And that run is not dissimilar to this current run And that's all there is. That actually doesn't go back any further than that. That was the IPO was around there. Okay, so were there a bunch of people that got really excited about Argenica and were buying like crazy into $1? Not like us. So we get a little bit cautious around these round numbers. We're not buying up there, but there were people buying up there at $1, thinking it's going to $2. And then lo and behold, all the people who got the stock in the IPO dumped their stock onto them, and down she went. And then, kind of the trend got killed, and momentum traders came out of it, and only the true believers, or those who were left as such after it going down, because you don't, you're only really a true believer after you're stuck in it, aren't you? There's a few of them are going to want to sell again. I think this is relevant. It's not that long ago. So what does that do for our potential trade here, Peter? It's such a great setup. Can't fault it any other way. And I've just got bang FRP. And what am I going to do? It's not our first rodeo at $1, but it was such an important point of supply. Is it going to hold me back? And for me personally, I think you could have a crack at it, because what's your worst case scenario? You buy in here at 94 cents, whatever it is. You get a big black candle at $1, and it closes at 98 cents on the next day, and that's when you get your third out. I think as long as you go into this eyes wide open and know that you need to watch the price action up there very closely, I think you can go for it. But it should make your ears perk up, or it should get you thinking a little bit as well. If you want the definitive answer, I'm going to give you the definitive answer. I would have a crack at it, but I'd watch it very carefully. Okay. Right now, there is not an inkling of a sign, of a clue, of an indication that $1 is a problem, clearly, right? So maybe it's not. And that's why we don't want to get too caught up on these things, okay? What's the worst that could happen? Really think about it. Thanks, Peter. 3 incredible stocks to look at, 3 great case studies as well. I might just whiz through the rest of these if you'll permit me. I won't type on them because they're all FRP 1/3. That's why they're my shortlist. Codan has been on the list for a while. Interesting. This is the first time this one's been in the list, and what's really neat about it is it's kind of a textbook turnaround play, isn't it? So we obviously had Coronado Resources, dogged for a very long time. Coal stock, nobody liked coal for a while. Now, for some reason, everybody likes coal, but this is the last one to go up, to be fair, isn't it? I mean, Whitehaven, Yancoal, they're all going up, even Yope's going up, and this is kind of the last one. So those ones I'm always a little bit cautious about. The last one to go up, it's the last one for a reason, everybody. It's not the last one to move up because it's the best one. But none of that matters to me because I'm looking at the technicals, and through this basing pattern, we're seeing a lot of white candles, aren't we? And that's interesting in itself. So that's impressive. When you see a big base pattern with white candles, predominantly white candles, that is now smacking of accumulation. It's going down, but reluctantly, right? It's a fighting retreat. That's a really good way to describe it. Any downtrend or any base pattern with white candles, think of that as a fighting retreat. Demand is still fighting very hard, and supply is still bashing away when it gets the chance, but it's actually making less progress. And then we sort of see, obviously, sideways, but then we start to see the price action come in. And it would have been, I think, a candidate for an aggressive setup. Nobody asked me about it way back then, and we probably didn't get much of a chance, because by that candle, we're now encroaching on the long-term trend ribbon, which is doing its job again, isn't it? It's trying to impede the price. A little bit of volume coming in. We need to remove the supply here, so we need to trade with that supply. It's probably, I'm guessing, also coinciding with a bit of a level. Actually, that bit of a level is a little bit of a ways away. There's the level. There you go. I knew it'd have to coincide with a level, and that's it there. But very strong candles here, and you know how I love the shallow pullback. We've talked about that today. Even the shallowness of the dink is very important. And then today's candle, I think, is exemplary. And that's really what's getting me in here on this turnaround setup. Another great case study here of a turnaround setup. Setup, and naturally they're going to have greater risk attached to them. Okay, so the continuation setup for me is the least risky. Turnaround setup, the next least risky, or the more riskier one, and aggressive, obviously, as the name suggests, is the most aggressive one, the most riskiest. But I still go 1/3 on my turnarounds, and I go smaller on my aggressive. So this is a plus. This is FRP if you had it. I can't see why you would have had it before this, but maybe some people are true believers and that hung in there. Plus 1/3 for me on that one. Super interesting. Let's go to Droneshield, which is just continuation, and there's plus 1/3 all over the bloody place, but continuing to go plus 1/3 there. It might be a bit scary for some people, but it hasn't. And if you got a third out at $2, you did the right thing. That's exactly what you were supposed to do. You might want to consider putting it back in, because clearly $2 is not a problem for this thing. This thing is going to come down. It's going to end at some stage, but there's nothing in this chart that's telling me it's going to end tomorrow. Okay, I don't know the future, but that is still hunky-dory for me. I probably headed off a few requests there on that one. Or maybe I didn't, because I bet you're all out of it already, aren't you? You're 1/3 yourself, 1/3 your brains out already. Shame on you, because if you started, if you were in this one, you should still be in this one. That's what I think. Emerald Resources, I thought a little bit long and hard about this one because there is a bit of a major point of supply here, but I just thought today's candle was just so perfect. I just love today's candle. And I felt that it's had 2 goes at $4. So this is the 3rd go at $4. And I think, obviously the first we bash into it, there's a lot of supply up there. People want to get at $4. What do they want to get at $4 is they probably, and it's just a guess now, we spend a bit of time at 2. It's only a guess. Where's 2? Yes. Look, a little bit of time here at 2, which means a little bit of time at 4. That's just the way it works, because that's the way people think. Oh, I'm doubling my money. I better get out, Oh, I've got a winner here. Second test here, we took out some more supply in the 3rd. So I thought, it deserved to get in as a FRP plus 1. Am I going to write that? I wasn't going to write them all in, but now I'm writing them all in. 1/3 on that one. I better pick up the pace here, because obviously there's a big list to get through. GTK, enough's said there. I don't know why we've written Amazon on those. No idea. I honestly have no idea what these guys do, nor do I care, but what a wonderful trend. It's been all over my list for a long time. This is a new entrant here, HYT, and it must have finally got itself above the turnover filter. I don't know, but it's just appeared. It's just appeared in the list, and it's more, yes, it's a turnaround play. It's not aggressive anymore, but just having, maybe this is a 1/6 one, isn't it? It's so small and obscure. I'd never heard of it until it came up on this list, but I think it deserves some skin in the game, some risk money. Have a crack. That's what that one's about. This is the Asian ETF. We did obviously see the Nikkei and the Indian market do well, and I'm guessing by the looks of this, that's where this one has its exposure, not in the Hang Seng or in China, but that's a guess. MDR still think looks great. There's no questions about that one, no explanations required, nor are any further explanations required about these. They've been in the list for a very long time. NXT has been out, I think, and since this one. We did look at it a little while ago, and we said black candle, low close, the opposite of white candle, high close, and I did tell myself to not put the N in there, because the N is superfluous, didn't I? So we just need white candle, high close, or black candle, low close. That minus 130 hasn't done it yet. So whoever asked me about it this week, I don't think you've had any reason to get out, which is good news, because you've got a reason, I think, to get back in with a plus 1/3 here. RSG, it just keeps going. There's no reason why. If you hadn't done it on this day when I put it in, or I'm pretty sure I put it on that day and that day and that day, why you still wouldn't do it today? It's a bit higher. That's the problem, but it's still plus 1/3 for me. SDF, which has been sort of just hanging around there, just no dink, apart from that candle, the absence of a dink, and that is really impressive for me. It's had a great run, 540, 620, and it's just hanging up there. So I think that deserves some risk. And Tuas, obviously, that's been in there many, many times since I started redoing these back at the end of May. No explanation required for that one. We've had a little bit of action on it recently here. Whitehaven, I still think looks fine. Lack of a dink up there, getting set for the next move. This is one, again, it's similar to maybe that Hyterra, which is just a bit of a skin in the game sort of thing, to see where it goes. Who knows? Everything's printing just fine there for me. Yancoal also, a bit like Whitehaven, no questions asked, and we've gone over Zip. So they are the shortlist for longs tomorrow. And I do want to do these because I think they're just as relevant. Because imagine you had a portfolio where you were long those ones and you were short these ones. Okay, and the same methodology applies. When the signal's there, minus 1/3. not plus a third, minus a third. Okay, that means you've probably got a CFD account, and then if you're normally doing $1,000 worth of risk, you're doing $300 worth of risk, but you would only have to put up, 1/5 of that $300, for example. Whatever it is, $60, right? So we're still basing it on the gross amount, not of the margin amount. Somebody asked me that question on Twitter today, I think. AZJ, and look, again, I assume you can short these. Some of them might not be short sellable, but I generally stick to the bigger ones in these lists. So they probably are. If you turn this upside down, we'd have a long setup, wouldn't you? I mean, literally, you'd have rising peaks and rising troughs. We've got falling peaks and falling troughs. You'd have the price dinking and holding above the long-term uptrend ribbon, but it's dinking and holding below the long-term, now becoming downtrend ribbon. They're the same setups, but just in reverse. And if you can flip it upside down, change all the black candles to white candles, all the white candles to black candles, change the pinks to green, you get the same setups. And that's what's beautiful about this trend following method. If that was upside down, we'd be buying it. So therefore that's a sell. Corporate travel is just trend. Another trend there. Beautiful trends. Trends on a Luca. Look at all of these stocks that are just too cheap. Aren't they too cheap? Surely they've gone down too much. It's the same as saying, oh, isn't Droneshield too expensive? Hasn't it gone up too much? If you're thinking in those terms, you are thinking the wrong way. You're not thinking like a trend follower. I think James Hardy's got real problems. Main Pharma has got real problems. NHF. I so wanted to do these tonight because I want to get your eye in for how these works, because basically I've just doubled your trading opportunity and giving you that natural hedge as well. If the market tanks, surely some of these have to go down. They probably won't all go down, but some of these will have to go down. That'll give you some natural protection against the ones that you're long in this list, if you know what I mean. Okay, we've done Adrian, we've done Peter, we've done Carl. Let's go back to Roscoe and let's go to Whitehaven Gold, which we've already done. I don't need to do anything there. FRP plus 1/3. FBR, not in this list, so I need to go back here. Here we go. FBR. I did see this today. I didn't put it in the list because it's just that upper shadow, and maybe that's me being a bit pedantic. I would have, I like high closes, I like big full white candles. It didn't quite do it, so that's why it stayed out of the list. I think if you've got it, maybe you bought it on this candle here, then I still think there's enough in there to hold it. I don't think that candle's enough to call it a sell. I just don't think it's enough to call it a buy. I'm just going to zoom out here and see if there's anything sort of lurking in the background. We're going back to sort of mid-2022, which I still think is relevant, not that long ago, and sort of drawing across here. Look, there's nothing really obvious that we're coming up to, apart from 5 cents. So if you had it, I think you're holding on and seeing if you can squeeze a bit more out of it until it inevitably prints those candles you don't want to see. But probably just on the basis of that last candle, just holding back, maybe trying to find something that's a bit crisper. Is probably the right word. So Roscoe is asking, this is Ross's. Ross is asking about this one for an aggressive setup. I can see exactly what you're talking about here, because we actually have got this sideways consolidation zone. We're starting to make good price action. Well, we're not really, are we? So we're still, we were up until this last move. I don't think, see, this is a tricky one here, because this is down, down, down. That's inside, downside again, and this is outside. So this is all one move. Actually, does it change anything? It does change it a little bit. It just complicates things. But that is actually one move, funnily enough. So it frustrates me when these situations happen, because it's kind of a quirk where that kind of makes it good price action still, doesn't it? Pretty sure that one's one there. It's still lower troughs though, isn't it? It's lower troughs, higher peaks. It's fine. This is good. This is great. This is amazing. And yes, I can certainly see why it's an aggressive one, because we've got the base, the price action is good enough. That's where I was going with it. The volume is hard to tell because we've got such a big day here. Not sure what happened there. Maybe the owner was selling out, profit downgrade, who knows? It's got a bit of a checkered past, this one. So if I zoom that volume out, I get to see what's really happening here. We've got some volume coming in, not a huge amount, but enough, I think, to kind of get this one going and say that interest is coming back in. Obviously, here's the problem. We've got now an interaction with the long-term downtrend ribbon. We need to see, you know what I'm going to say, we need to see a little bit of a dink. The shallower the dink, the better. And then I think I could think about it. If you're really excited about this one, Ross, you know, you could go on the basis of that candle. I'd only add a little bit personally. I think it's more of a 1/6 because of the severity. So with this species ending event, which didn't turn out well, it was obviously the event ended the prior uptrend, but it didn't really follow through. But I still think there's something that needs to be respected here. Okay, and that's why I'm a little bit less enthusiastic about it. I think we'll find better ones out there. So to summarise, yes, I can see why you're talking about this one as an aggressive setup. It has the hallmarks. I think it's progressed past the aggressive setup, though, more to continuation, and therefore we need to see that interaction with the long-term downtrend ribbon, which also coincides, to be fair, with a pretty important area of past supply. And I think if we can see the shallow dink and then some nice white candle, I think it sets this one up better with lower risk. But that's not to say that if you're confident about it, if you're happy to take higher risk, because that's what you're doing, to add a little bit now, and that's where I'm quite firm on this one, is I don't think you would add a lot to it, just on the basis of what I can see. But I'll leave that one up to you. Let's go to Brendan, who's got VNT. Ventia, that's actually, is that not in my list? I'm pretty sure that was in my two. Yes, it is there. So we did talk about that one. FRP plus 1/3 tick. I looked at, to be fair, my scans cover all the stocks on the ASX, about 2,500 stocks and ETFs go into my scans. They get narrowed down into a scan list of probably about 150. I narrowed them down to a short list of about 20 or 30, and then I narrowed them down again to about 19. So Brendan, you've picked one of the 19 stocks out of 2,500 that I picked as well. So that, for me, tells me you're on the right track. Now let's go to your next one, which is SRG, which I think is good, but clearly has some problems. Last time we looked at it was an FRP, and we said that we would think poorly of it if it did a big black candle like this. Now that's not actually there, so I delete that. You see what actually happened. But I was warning you, I was saying a black candle closed beneath that zone and would have some issues. And I think it really happened here, didn't it? But before that happened, I think we had enough reasons to be less than a third even up to that point. And I wonder, I think we said we were going to get down 2/3 if that occurred because there were some other things going on. And I suspect after we spoke about this, even with that lower peak again, this probably feels like more of a 3/3 sort of thing by the time it happened. I'm going to leave that there for posterity and say that based upon what I can see and what we have, the analysis we've done in the past, I feel that you would be zero risk position on this at this stage. I don't feel that's enough to get me back into any risk, although if you did, I wouldn't complain. But the reason why, for me, I wouldn't be going into this right now is we have created, I think, a pretty substantial major point of supply up here. Let me make that read. And look, you can draw it here or you can draw it here. I'll leave that up to you. But it is there and it is important. And I think that it's going to create some issues for SRG going forward. It's made even more important for me because of all these black candles. There's just so many black candles in here. I think there's going to be quite a bit of latent supply in this area, and that worries me a little bit. So to alleviate those fears, I need to see something really special, right? I need to see a cluster of white candles. I need to see an influx of demand to tell me that those white candles are dealing with that supply I fully expect to be there. I need to see a shallow dink, a nice higher trough, rising troughs, rising peaks. And we're not seeing enough of that yet. So for me, if I had this one, well, I wouldn't, because I feel that we've had reason to get out of it up this stage, and I wouldn't be adding any because I don't think there's enough evidence to do so just yet. And that could be famous last words tomorrow. You can see a big almighty candle and it closes at $1 because it's been taken over. But I can't see that. Personally, I can't see that there's a very high possibility of that happening. Now, Brendan, I gave him a big thumbs up there for picking VNT, but he's also picked GTK as well. So there you go, 2 of his 3 that he asked about, and he said that he's looking to add more risk on those, and I can't see why you wouldn't. Terry's got AL3, which was one of those I put in the category, I reckon maybe I ran it on that day there. as a have skin in the game position. Maybe it's a six, maybe it's $50 or $100 or whatever it is that you're just having a bit of fun with, okay? And you're just in it until you get that candle like today. Pardon me, running out of juice there. Excuse me. You get that candle like today, which tells you want to lighten the load. And I think that's what today's candle is, Terry. So it's a minus a third. If you pedantic, let's say you did put $100 on it, you could take $33 off. Okay, and keep $66 on it. That's the way you want to think about these. But I do think that is a signal there that some supply has finally found the system. Let's go. That's all the offline requests. I've done Jesse's case study for drawing the peaks and troughs lines. James said, was there a particular share market cycle mentor or other catalyst that steered me away from fundamental analysis to join the dark side and become a disciple of supply and demand? Yes. Look, I certainly started out thinking that fundamentals were important way back in the early 90s. I started investing in shares from the age of 16, whether it was a Telstra float or the CBA float. I can't remember which one came first, but that was my first foray, and then came Qantas. And a few of the insurance companies, don't ask me to name them all. I know Woolworths was around that time, and it was a golden era, wasn't it? The 90s, you couldn't do that again. Just like kids these days, unfortunately, can't buy houses. Kids these days aren't getting the opportunities of those floats of that ilk. Government floats, monopolies, long-standing businesses. What do you get now? You get Guzman and Gomez, right? And they were priced cheap because they were selling to the public, of course, and you didn't want the public to lose money because you wouldn't get elected because you were the government. So, look, I must admit, got a bit lucky, and everything I touched turned to gold, of course, because they were all priced quite cheap and went up. And I was in high school and then later in uni, and I did an economics degree and was learning about all these important things. But I started hanging out down at the Australian Stock Exchange in Perth on St George's Terrace. I don't know if you remember the ASX building. Down the bottom, there were some terminals, actually, that just the punters, the riffraff would come in and type in their favourite stocks. Very cutting edge back in the mid-90s. And I would go down there. I think I was at uni at the time, so I'd drive my little Hyundai from UWA around Mount Spey Road there, and actually I would park at City West, catch the free train in, and walk up to the exchange. And there was some guys down there. One young guy in particular, and he seemed to know what he was talking about because everybody was crowding around him, and he was watching his stocks, and he was very quite friendly and talkative, and started talking to him. I learnt that he was a doctor. He worked in emergency rooms. He travelled the world. Told me all these stories that got me thinking. You know what? He was 35 or 36 at the time, and I thought, man, this guy's trading. He's a smart guy, but he doesn't work anymore. He's trading. He's travelling the world. He's having a great time. That's what I want to do. So I figured, well, if that's what I want to do, I better hang around with this guy as much as I can. So I sort of weaseled my way and became friends. And I was the only 17-year-old down at the ASX building, I could tell you. So he took me under his wing and taught me about technical analysis. He was a technical analyst, and that was completely foreign to me. And I started learning technical analysis from there, and that was my catalyst for doing it. I won't go into any more of the story because it is a doozy, let me tell you. Not quite Wolf of Wall Street shenanigans, but definitely had a good time over those many, many years trading shares with my good pal. If you're Perth-based and you're of that era, you probably know who this person is, and you could probably type in his name, and I'll confirm it for you. I still know him. We had lunch on Thursday night, so we are still friends now after over 30 years. So that is answering your question there, James. Michael, I would like to know how we can use volume in relation to price action, and I'll see if I can answer that one, Michael, as I go, because that is probably a few sessions on that one. But how can we use volume more in our analysis? Let me go to your online requests, and let me make sure that nothing's missing down here. Nobody's guessed who that. Nobody from Perth has guessed who that individual is. He's a flamboyant individual. If you've spent any time down the ASX, you would know who this person is. Ross saying hello. Michael saying, do you have a view on EOS? Yes, I do. For you, let's have a look. Electro-optic systems. Oh, look, it was looking perfect, Michael, until this candle and this candle here, unfortunately. And far from perfect now. Those candles are big problems for me. That don't look good. And the fact that the one is backing up the other, and today's really closing on the low, the upper shadow, the fact that this high is lower than this high, I don't like it. And sometimes, with things, things don't always work out the way we want. And instead of, let's say we got in here or here, and we're thinking, oh, we've got an easy run to $2, and it doesn't happen for us, and we just got to take our lickings and move on. Far from lickings though, because I think you're probably about break even. I might be being a little bit jumpy here, a little bit skittish, but I don't like those candles. Maybe I'm too skittish. Maybe I should leave it until it closes beneath here. And this is where, there's some discretion in these things, but not much. A little bit of wiggle room. I think you could leave it till the close tomorrow and see how it's going, or I think you could leave it. You could watch, see how it opens, instead of just jumping straight out, right? Even though that's my gut feel. But that low there. So this low is 154. So I close beneath 154 or less. Let's go close minus 154. This would be the more conservative way of doing it, giving a little bit more time. Minus 1/3, and it's probably just undoing the third that you got in, to be fair. Otherwise, if you're like me and you really don't like the look of those two candles, then just dust it on the open. You can always get back in. If it starts to throw in some white candles and you're getting in at 165, well, really, what have you really given up? A little bit. If it's going to go to $2, you've given up 5 or 6 cents. All right. You will continue to look at this. It'll continue to come up in your scans. Don't worry, it'll still be there, and you will see it if it throws up another setup. Don't get caught up on these things. Kind of ditto, actually. Another one which was looking the goods, and it's one of those where my philosophy is I don't need to see the breakout to get in, and that's something like on that candle, I've written plus 1/3. And this is where maybe waiting for the breakout might have been better. Well, not might have been better, it would have been better because you wouldn't be in it so far and you wouldn't be cursing my name. But there are some issues here in that this black candle, those candles aren't created by people who want to have this risk here in Polynovo. They're not created by true believers in the stock. They're created by people who are wanting to get the hell out. It's fighting hard though. It's fighting hard. It's still fighting there. It's still fighting there. It's still holding the short-term trend ribbon. I think last time I spoke to you, I said close beneath this trough here is a minus 1/3. I'm going to reiterate that. But I think there's some issues here as well. So unfortunately for you, Michael, you're 2 from 2 on stocks that have issues. Let's hope the next one this one doesn't have an issue, but I didn't give you this one. I think this one has flown literally under my radar. It wouldn't have made my turnover filter, which requires a minimum of $200,000 a day to be traded on average over the last 21 trading days, 21 trading days being a month. So probably why I haven't seen it in my scans, but I'm glad you've picked it up. SKS Technologies looks brilliant. Happy to hold it if you've got it. I don't think I'm a buyer just on that last candle because of the upper shadow, but look, any shallow dink white candles, then looking to add to this one, but certainly on my radar now. Thank you, and if you've got it, happy holder there. So hopefully you are on that one. King is saying hi again, Carl. Have a look at Ventia, which I have looked at. So that was a big tick for me. King, I won't look at it again, but Ventia is a big tick. SPZ, which is smart parking, also a big tick. And I'm going to go ditto on this one for that last one there, SKS, because I'm guessing this one also hasn't appeared in my list because of the turnover filter. And I'm trying to find that one. There we go. But it absolute FRP holding plus 1/3. Look, that last little shadow might be a bit of an issue, but maybe splitting hairs a little bit there. So happy holder on that one. No complaints on its King. Going to Adonis, looking at Linus. Linus, we're looking to buy in a break of 660. So LYC, we just had a little bit of a rally. I don't think this is well, it's not an aggressive setup, is it? Because there's no base pattern. It's not a turnaround setup yet because we still need to see this move here. And even then, Adonis if we buy and a break of 660. So that's what Adonis is looking for. So he's doing the right thing in terms of looking for the dink in the zone. I'm not sure it's going to get over the line in terms of tradecraft, just in that I'm expecting a giant point of supply here, which is reinforced by this one up here. And I just don't see the reward to risk. I just see a stock that ultimately is probably going more sideways now than down, but certainly more sideways than up also. But I can see what you're looking for as a turnaround play, but I don't think we're going to make the reward. Well, even if you're going to calculate it and you're going to see if the reward to risk is 1-to-1, and then it does get a tick from me. But even then, I think we'll find better turnaround plays, and we have found better turnaround plays today, haven't we? MQG does look good. MQG, no issues here. This one's very simple, isn't it? It's still high peaks. There might be a lower peak in there, but it's very close. It's still fine. Great candles, great trends. It's having a little bit of a stagnation. It's having a little bit of a breather here, but it's had a great run. But I've got no issues with that one at all. Full risk position, and next white candle high close. We would add some more risk on that one, I think. TTT, which was a little bit disappointing today, and anything with 3 letters, I don't know if you remember, I could never find Leo Lithium either, just in Amy Broker. Let's go TTR or TT. Oh, God. Let's do it the hard way. Click on this, and so you see it just goes T, and then it just goes down the list. TA8, and then I'm in the S's. If I click like that might make more sense. Now I can go down the list. There it is, TTT. I have to go TTM. I didn't get it. So this one, I think I put in here or here. Again, it's one of those sort of, risk skin in the game, risk positions. Today's not an ideal candle. You might want to give it just one more day, but I think if it doesn't come good tomorrow, if we don't see a white candle high close tomorrow, then yeah, I think we're just hopping out of this one. We don't want to get caught in these, okay? We don't want to turn a trade into an investment, if you know what I mean. We're in these for a good time, not a long time, and if the tide turns, then we should heed that and not hope. Be in a situation where we're hoping it comes good, even if it's just a little bit of money that we put in. James asking if that's a species ending event. It's very close to it. If it had closed any lower than where it did, it's a yes. It closed any lower down the previous day's candle. Look, it's going to add up to that anyway. Whether it's officially a species ending event or not, it's pretty darn close. Let's go to John. We've got BIS, which is still looking great. A little bit of an upper shadow there, but I'm not too fussed about that. Not enough in and of itself, John, I think, to manage our risk at this stage. I know it makes you nervous. I know you look at that shadow and you go, I want to get out, Carl. I want to take my profit. But I don't think it's enough, and that's what I think, and you're going to have to do what you're going to do about it. Nuix is no problems at all. I think that's a very shallow pullback after, 2 very strong candles. This is a very shallow dink for me, and this looks well placed to continue to go higher and maybe even go test that $4 round number. So no questions for me on that one. Next white candle high close plus 1/3, as is on this one actually. I think this is next white candle high close as well. We are in some supply that we have looked at in the past, clearly, because if I do that, we're going to see where that is. But if we zoom in now and we see, well, is it really manifesting, and how badly is it manifesting in this zone? And I don't think that supply is making a lot of progress, don't you think? So I think it's fine actually. I think we're in a shallow dip now. I think today's candle is very interesting. Again, as a skin in the game sort of thing, getting started on this, I could add some risk to this one today. Yeah, I could go on today's candle. I think I could go plus 1/3 on that one for risk position if I had it. Let's go to DDR. We did talk about that one. Jason's asking for FUN, which might be in America, which is in America. I'll get back to those in a second. Resco saying heads up. No, I've done that one. Colin. Woolworths, yes. I said, let's have a look at that one today. So you can see, okay, look, the last time we looked at it, we said white candle, high close. White candle, high close. Good, I put the N in there. So white candle, high close, near 34. Oh, it hasn't done it yet. What about this one? That closed at 33.82, closed at 30. Well, that's near 34, isn't it? So I think it's pretty close. Yeah, let me just reiterate. Next, and I'll take the 34 off at this time. So I think that's it. I think that's where we're at. Is plus 1/3, and this is a turnaround play, isn't it? We're in the dark green zone. In fact, it's orange now, but we're in the long-term downtrend ribbon. We talked about this for an aggressive setup in the past, and now we're looking to add a third. And the next area is up here. I think you'll get 1-to-1 into there. I think you'll be okay. So yeah, just ditto on what we said last time. It's still percolating. Michael's got DRO, which we have talked about, nothing else to do there. NXL we've talked about, nothing else to do there. And GQG, which, okay, this one I haven't looked at. I didn't see that today. Look, not a species-ending event, but you know we're at $3 as well, and that is the first time we've been here, no doubt. It is indeed. So I think, look, on that basis, I think we can just knock a little off here, and that's all we're doing. Minus 1/3 as a precautionary measure, okay, and that is at tomorrow's open. You know, not asking too many questions, but it means we're also plus 2/3, and then we're just going to continue to look at the price action. So if we were to see, it develop into something like this, then we're going to take some other steps, and we might be looking for under there for a minus 1/3, or if the candles here are really bad, minus 1/3, and certainly under here, but that's getting a little bit far in the future. I think as a precautionary measure, just on the back basis of that last candle and the $3 round number, it's the fact that the two of them are coinciding, that's a minus 1/3 only for me. Excuse me, sorry. AL3, well, we've done. AWJ doesn't ring a bell. Oh, okay. Again, I think maybe slipping under my my radar here. Happy to own it. Today's candle with that shadow, I think we're just waiting for the next white candle. White candle high close, plus 1/3 on that one. FRP if you've got it, but not rushing in tomorrow just on the basis of that last candle. But everything else is setting up very nicely for you there, Robert. WTM. Which we did look at. Waratah, again, skin of the game. I'm pretty sure I had that in my shortlist, did I not? And I mentioned it before. Skin of the game and just seeing where it can go. Avant, welcome Avant. I do have an email from you I need to address, and there might be a few people that have asked me for TradingView ribbon access. I just haven't been able to action that for you last week. I will endeavour to get onto that for you this week. Apologies. FMG. Just give me Avant. You're new to this, but you should really, when you give me something like this, which is so clearly at odds with my model, you should say, I'm looking at doing this. Okay, because all I can see there, it's on my downtrends list, which means for me, it's a short, or it'd be looking for a short, so I can't give you any more than that. It's a zero risk position because I wouldn't own it, and there's really nothing in there that could possibly occur in the next half a dozen candles or so, in brackets, therefore to make it relevant to us, to cause me to want to buy this. It's that far off being a buy, because we'd have to be an aggressive setup or a turnaround setup. It's miles away from that. Certainly not a continuation setup. So Avant, don't give me these unless you're going to explain, hey Carl, this is what I'm looking at. I like these white candles. I can see the volume come in, or that this is something which I think you need to know about. Tell me what you think about this. Okay, because for me, that's a pass for me. Nicola asking about AMD in the US. We're getting to that in about a second. Brett's going, remember going down to the old exchange, watching trading through the window. Took a big hit in 87. 87 predates me by just a few years, not that many. But I do remember going to the Reed Library in UWA, where, I don't know if you've been, maybe back in the day, you probably remember this, they had all the old financial reviews in those big red binders. And whilst all my mates were down at the ref there, drinking $5 jugs of Emu Bitter, I was probably in the Reed Library reading about, from the Financial Review, the events of the 1987 stock market crash. There you go. Let's go up the list now, and we're going to go to Nicola's AMD. And we're going to go here. We're not far away from finishing. I'll do this very quickly for you. Now, let's go here. Yes, no, yes. And we're going to go here, here, and go AMD, of course, Advanced Micro Devices, not NVIDIA, not NVIDIA. The poor man's NVIDIA, isn't it, Nicola? I'm guessing Nicola doesn't have it because obviously we've gone through this, but she's looking at the setup that's here, this turnaround play, and it is actually starting to look very interesting as a turnaround play. I would have liked a higher close on Friday night. You can see that candle there, the little shadows just manifesting a bit of supply that is at this major point of supply. Now it looks a bit flat, but it is a major point of supply because there is this medium-term uptrend on this side and this medium-term downtrend on this side. That promotes that to a major point of supply. A little bit of a shadow there. Well, I can see why you would do it. I think it's a bit of a sneaky, cheeky trade. I think you just, yeah, it's like that other one we looked at earlier where we said, you know, like EOS, like we got in and, you know, if we're not going to take it too personally, if 4 candles later we get a signal to exit, okay? That's kind of what my gut's saying here. I'm going to go next white candle, so white candle high close plus 1/3. I'm with you on this, so I'm not poo-pooing this one at all, Nicola. I'm with you. I see it too. I wonder if we'll find better turnaround plays tonight, okay? But if that's the one that you're thinking of as the best one you've seen, I can see what you're going for there. So it's a yes from me, but we're going to be on our toes, I think, with this one. Heading back up the list, and I do have Microsoft from Peter before I forget, MSFT, and I want to do this one anyway. Wonderful, perfect, amazing. That's why the Nasdaq and the S&P 500 looks as good as it does, and why the Australian market with BHP and Rio and National Australia Bank and Westpac and our insurance companies and James Hardie and Brambles, you know, looks the way it does. We just don't have the firepower. That's amazing. No complaints about this one, Peter. So that is plus 1/3. And you know, if you look at that, you think, why is everybody so worried about what's going to happen next in the world economy, and US stocks are overpriced and overvalued? And this is Microsoft. We're not talking about some little backyard job here, all right? This is freaking Microsoft. FRP plus 1/3, no questions asked. Let's go up the list again to, I think Jason was next with his US stocks. Yes, FUN. Six Flags Entertainment. Well, there you go. The theme park's over there, isn't it, if I'm not mistaken? I want to zoom out straight away. Obviously, that's a yes for me over there, but I want to zoom out and see if there's anything we need to be concerned about. This one's not that long ago, sort of February last year. Pretty important point of supply, because I think this point of supply failed at this point of supply. So I think there'll be a few people that might be just, you know, giving it the old side eye next time we get here. We're not that far away. Look, again, it's one of those, I'll leave it up to you. I can see what you're going for. Everything else checks out on the setup, but it's at the tradecraft stage where there's a bit of an issue. It's only a bit of an issue. Hey, who's to say there's going to be supply there? We don't look like we're worried about it right now, okay? But as long as you're going into this eyes wide open, then I can certainly agree with that. Let's go to GKOS, Glaucos Corporation. I do not know what these guys and girls do. Going to go to the weekly chart, because everything obviously checks out there, looks amazing. Let me zoom that out. And if I can't see it on the weekly chart, we've gone back to 2019 there. It doesn't matter. I mean, I could go further if I wanted to, and I'm not seeing anything coincidentally in this case, but you can go back too far, because we're talking about market memory here, right? And markets are like us, they're like humans, because they're run by humans. That, you know, humans are interacting. Our memories only last so long. This is perfect. This is perfection. I can't fault this setup. It's absolutely brilliant. FRP plus 1/3 for me. I love doing US stocks, everybody, because after the trudge through the Aussie market, look how easy it is over here. Wonderful stuff. Save that one down. Let's go to James's. And next one, NHC. It's not New Hope Corporation, I'm guessing. National Healthcare Corp. Double check, yes. Oh, it's definitely not New Hope, as it looks that good. Quick look out the back here. And it's all good there. Let's go back to here and stretch it out for 30 seconds so I get my marker on YouTube going for me. FRP plus 1/3, and click save on that one. And Jason's last one, PLTR, which is an AI stock. So this is Palantir Technologies, if I'm not mistaken. I need to do that, PLTR, Palantir Technologies. Very famous AI. So actually, I like this one. This looks really good. That's a really nice base pattern there, actually. Love that last candle. I love the fact that, look, notice this little failure here. It's a little failure at the major point of supply, and then we smashed it. Friday, we're not worried about this point of supply anymore. And this is the wonderful thing that I've taught you, Jason. I think you're appreciating it already, Jason. I know you are. Is this idea that you don't have to wait for the breakout, because you read in your textbook, your technical analysis textbook, that you had to wait for the breakout. And Carl taught you that you actually don't have to. You just need to see a white candle that's close enough to that level to tell you that they don't care about that level. And then all those breakout traders, they're helping you because you're already in. Let me just quickly look out the side of my my left eye here. We do have a bit of a level, but I think this level here is speaking to this level here. That's what I reckon. So I'm not too fussed about that. I think we're okay. And again, we're going into this eyes wide open. So if we saw something really surprising there, it wouldn't be a surprise at all, would it? We'd know why it was there, and we could deal with it accordingly. I'm FRP 1/3 on this one. I reckon this is the cheekiest setup of them all tonight. So and I like the cheeky ones. So that's my favourite so far. And that's in fact, thank you for all of those. Asking if $30 is an issue. I don't think it's an issue because we've been there in the past, Jason. Let's go back up the list again, and Perry's not here today. We're missing you, Perry, if you're watching this in the recording. And that takes us to the top, so we are officially done. So let me head, therefore, back to the PowerPoint presentation and do that one, and remind you that everything we've discussed this evening, it's just general information. Okay, hopefully you learned something. Hopefully it was somewhat entertaining at times, but it's just information that you should consider very carefully within your own personal circumstances, financial situation, objectives and needs, and apply it accordingly. If you need help, seek out a professional, because we all know those financial professionals, how clever they are, how big their brains are, and how they're always working in your best interests, ladies and gentlemen. Anything you do is your fault, not mine. That's the other thing to remember. With that in mind, it has been a pleasure chatting with you this evening. Reminiscences of a stock operator, Capilingua style. Okay. I wonder if you've read that book that I did send you the links for, and somebody sent me a YouTube about it, and maybe I'll share that in the recording link, which I'll send to you a little bit later on this evening. It has been a pleasure chatting with you. All the best for your trading and investing. Till catch up again. Bye-bye for now.